After 2 weeks of no weekly summary, now is the time to talk about everything that happened in the last week. We're going to talk about a lot of AI news, semiconductor news. The biggest companies in the world have a lot of news and they're focusing on AI and semiconductors. We're going to talk about the market that seems like it's kind of trying to correct itself. And we're going to get ready and talk about the earnings that are started on Friday. Are you ready for it? Weekly summary. We haven't done it for 3 weeks. Maybe there are people that don't remember. So let's go. Hi everyone and welcome back to the channel. If you're new, hello. My name is Micha Stocks and on this channel we talk about the market. We run weekly summaries and maybe in the future I'm going to start updating more frequently. Here's our YouTube channel, Stock Talk with Micha Stocks. We currently have over 3K subscribers, so if you're new, it would be amazing if you can subscribe to the channel and maybe even turn notifications on. When I'll start uploading more than a weekly summary, you'll get notified. Let's dive in directly to the market. My microphone is all over the place. Let me just fix it. Oh, okay. It got detached from the table. Here we go. So the NASDAQ ended the week on a negative note, minus 0.58. S&P down 1.5%. Dow Jones down 2.3%. And the Russell down 2.8%. You can see that most of the downturn came on Friday. The news of Iran planning to attack Israel. I'm recording this Saturday evening when Iran already sent over 100 drones and missiles towards Israel. That, of course, crashed a lot of things. We're going to see that in a second in the market, not in Israel. So this is the current week. If we look at the last 2 weeks, or actually April 1st till today, you can see that most of the averages are down. NASDAQ down 1.3%, S&P down 2.4%, Dow Jones down 4.5%, and the Russell down 5.5%. This is not due to Israel-Iran. This is mainly due to the fear that rates are not going to come down as fast as expected. We're going to talk about that when we talk about CPI and PPI that were released this week. When we look at the indices themselves, you can see that financials had the worst week, down 3.6%. And on the flip side, communication and consumer discretionary are pretty close to a zero. That brings us to Bitcoin and Ethereum. This was taken before Bitcoin even went down further. Bitcoin down 5% and Ethereum down 10% on the week. A lot of volatility during the weekend due to the tension in the Middle East. And every minute that you look, these numbers can change in a dramatic way. When we look at oil and gas, you can see that oil is down 1.3%. Gas is unch on the week, while gold and silver are positive. Gold up 1.5% for the week and silver up 1.9% for the week. This brings us to the Magnificent Seven. Apple with a great week, maybe bottomed around $160 per share, up 4.1%. Tesla up 3.7%. Google up 3.4%. And on the flip side, Meta down 2.9%. I'll stop here and just remind everyone that everything and anything that you see here is not financial advice. It's just me providing you entertainment and hopefully some educational material so you can be better at understanding the markets. Let's continue. While we look at the S&P 500 heat map, you can see that it's quite the 2023 playbook. Everything is red except the Magnificent Seven, the biggest stocks in the market, and you can see the same thing on the NASDAQ. When you ask yourself, why is this picture, or how come it happens this way? Well, these big companies are earning a lot of money. They're a mountain of revenue and earnings. That's why they're less sensitive to anything that happens, which is related to interest rates or geopolitical tensions or things like that. They're just a fortress of money. And that's why in volatile times, it seems like the easiest bet to put the money there. Why? Because Apple is so big. Currently, everything can go bad, right? But Apple is so big. Google is so big. Nvidia, etc. That is mainly the reason. When we look at the NASDAQ, again, it's the same companies. And that brings us to the summary of the week. So this headline actually came on Friday. We now know that Iran sent over 100 drones to Israel. Hopefully nothing happened and everything was taken down or intercepted, and missiles as well. This frightened the market. In Friday, the VIX, the volatility index, went up 17 to 20%. And of course, the crypto market sold off during the weekend as well because people wanted to liquidate just in case something very, very bad happened. We also had during the week CPI. CPI is the inflation gauge, and it came out hotter than expected. When it came out hotter than expected, that was Wednesday. The market sold off on the news because they didn't expect CPI to be as hot as came out. Why did the CPI came in as hot as it did? Mainly because of shelter and car insurances. Now, shelter is a lagging indicator, which should have already rolled over. It didn't roll over yet, but when you think of interest rates as they are, with people locking in their mortgages on lower mortgage, keeping increasing the rates, doesn't really impact those people. And that is why the Fed is kind of stuck between a rock and a hard place currently, because keep raising rates is not going to be the solution. And also the Fed is, you're going to see it in a second, is forecast to lower rates. So this surprised the market. A day later on Thursday, the market got a PPI index, which is the producer price index, which is not influenced by shelter. Hence, it came down and was better than expected, which the market loved and went up according. Then we also got during the week the FOMC minutes, where the Fed officials basically summarized their meeting a few weeks ago by saying they want to cut rates, but they want to feel that inflation is under control. Currently, they don't feel that way. And the market, if the market started the year pricing 5 rate cuts, currently it's pricing between 2 to 3 rate cuts starting June. The percentage keep going down every CPI print because every CPI print comes hotter than expected. But we need to remember that the Fed doesn't look at the CPI or the PPI. They mainly look at the PCE. Why? Because the percentage of shelter in the PCE is lower than in the regular readings. After all of this, you want to talk about companies and stocks? Let's go. China tells their telecom carriers to stop buying chips from Intel, AMD, and also from Micron. This came in Thursday night, Friday morning, and impacted the semiconductor stocks, which went down during Friday. Google Cloud had an event during the week presenting all their new initiatives and their new products. And their CEO is mentioning something very interesting. He's saying, look, up until now, everyone's experimenting with AI, but we are now seeing more and more companies not only experimenting, but also building generative AI agents, which means that everyone is on board the AI train. And if you're listening or seeing this video and you haven't played around with ChatGPT, Midjourney, Runway, Gemini, Grok, anything that's AI related, please do. It's not the future, it's today. People are creating music that way with Suno AI, are starting to hopefully getting a Sora from OpenAI, which will enable them to create movies and images. Everything is created through AI today. Don't stay behind. Don't think that it's going to happen in years. It's happening now. FSD, full self-driving, Tesla, lowering the price of their FSD from $200 a month to $100 a month or $99 a month in hope that their take rate is going to be between 10 to 20%. This, of course, will impact the bottom line in a very significant way because the cost is already absorbed and now it's only revenue coming in. Would be very interesting to see if the take rate is going to go up. I did a live stream on my Hebrew-speaking channel while I drove from my house all the way to the closest shopping center using FSD, except one stop sign that the car missed. Shame on the car. It went all the way smooth using FSD version 12. Hopefully that will be fixed as well, and then we might see more and more cars using FSD. Very, very interesting things coming out of Tesla. This is Mustafa Suleiman, who joined Microsoft about 2 months ago, leading their AI initiative. He's Microsoft AI CEO, and he plans a big launch of new Windows and cloud capabilities next month. Beth Kinding from IO Fund updates us that the AI PC wars are heating up. Every company right now wants to create their own chips, whether it's for servers or PCs or for Macs. That's Apple, whether it's AMD, Intel, Microsoft, Apple, Qualcomm, Google, ARM, everyone. There's a huge semiconductor race right now, and everyone is trying to be better than expected on their AI capabilities. We saw Amazon this week, Andy Jassy, Amazon CEO, sending out his annual 2023 letter saying that they keep pushing forward their AI initiatives while also reducing costs. This might bring Amazon over the $2 trillion valuation. Should keep following Amazon. This week, they touched the all-time high, weren't able to stay above their all-time high. Maybe in the next few weeks or few months, Amazon will take charge of their stock price. And Apple plans to revamp their whole Mac line with M4 AI-focused chips. Like I said, we're going to talk a lot about AI and chips this week because there were a lot of news around that. Microsoft and NetEase are joining forces to sell Microsoft games like World of Warcraft and Hearthstone in China. If you know or you don't know, Chinese market is closed for American companies like Microsoft, like Facebook, Google, and they're using their own companies. That's why these joint efforts are very important. Trump's DJT, Trump's company, which is Truth Social, and their stock DJT is plunging week after week, day after day, and that is before Trump even sells his stock. And if you're in it, just be careful. I wouldn't recommend anyone playing around if they're not safe with that stock DJT. Elon Musk is supposed to meet India's Prime Minister Narendra Modi, talk about opening a Tesla factory in India. This would be a first factory in India, of course, for Tesla, and a huge market, bigger than Chinese one, for India. That is surely a tailwind for Tesla, although opening factory takes about 3 years until it's up and running and spitting out cars. But still, opening up the Indian market, and maybe even in the preliminary, there will be an approval to import without tariffs. That would be amazing for Tesla. We might hear more on that. Google working with ARM, teaming up with ARM for new chips. For Google, like I said, everyone is looking for chips right now. The new ARM chip is going to be a giant leap ahead from AI training. It's going to power Google's search engine. A lot of talk about that. Intel unveils this week Gaudi 3, their AI chip, which is, according to CNBC, to Christina Partsinevelos, 50% better inference, 40% better price efficiency, and a fraction of cost. And if you ask yourself who's going to buy it, the answer is pretty easy. There's a long pipeline for companies waiting for NVIDIA chips. Now, if you know that you're going to get NVIDIA chips in 2 years, but Intel you can get tomorrow morning, you might say, you know what, let's install Intel in the meantime until we get the NVIDIA chips, and maybe you won't. You won't get the NVIDIA eventually, but those are the, let's say, focused customers. And even Blackberry came back from, I don't know, from the ashes, I think. Blackberry and AMD are teaming up for robotics breakthrough. And of course, Blackberry shares surged with that news. We also heard from Micron. They're raising their prices by 20 to 25%. Chips. And Taiwan Semi getting $6.6 billion of direct subsidies from the U.S. government to open an Arizona factory that should, once it's operational, should take the load off the Taiwanese factory and hopefully leave the factories and the chip production in the U.S. Beside that 6.6, they're also able to get $5 billion of loans through the CHIPS Act. And Apple, remember we talked about China, held talks with Baidu over their AI. And again, because when you're using Apple phones, you're using Google as the default search engine. In China, you can't. That's why they're using Baidu. And they're also talking to Google to maybe incorporate Google's generative AI into the iPhone, which means Gemini. Those were all the news for this week. Are you ready for next week? Because next week, earnings are actually started Friday with the major banks like JP Morgan, Citi, and Wells Fargo. During the week, we're going to get earnings from Goldman Sachs, Charles Schwab, M&T. That's on Monday. Tuesday, we're going to hear from Bank of America, United Health, Johnson & Johnson, Morgan Stanley, Bank of New York Mellon, PNC. And in the afternoon after the close, we're going to hear from United Interactive Brokers and others. Coming Wednesday before the bell, we'll hear from ASML, Abbott, Travelers, US Bancorp, and more. After the bell, Alcoa, Las Vegas Sands, Kinder Morgan, Discover. And that brings us to the big Thursday, Taiwan Semi, Nokia, Blackstone, DR Horton, and others. And after the bell, Netflix, Intuitive Surgical, PPG, and others. Friday morning, we'll hear from American Express, P&G, Schlumberger, or SLB in their new name, and others. We are starting a Q1 earnings. And why is that relevant? Because a lot of stocks went up during Q1. And now the market wants to see if the company's earnings are catching up to the stocks or the stocks ran too much. JP Morgan, as an example, ran too much. How do we know that? Because Friday, after their earnings, which weren't bad earnings, they were actually good earnings, the stock went down 6%. Why did it go up? Why did it go down 6%? Because JP Morgan went up 30% in the last 6 months. So the stock went ahead of itself, and now it's correcting. We might see that with more and more companies, depending on their earnings. And that's, of course, might be the next leg in the cycle or a correction in the cycle. We're going to talk about that in a second when we look at the charts. We don't have anything macro related, mainly Fed talk, which always moves the market. But the main narrative from the Fed is we're going to reduce rates during the year. And that, of course, brings us to the charts. S&P 500, you can see here several of the moving averages. I'll start with, let me even change that to a line. It would be easier for everyone to understand. What you see right now is the S&P 500, the index itself, the SPX, or we can go to the ETF that follows that index, the SPY. You can see that we are now touching the 50-day moving average. We haven't been this close to the 50-day moving average since November 2023, which means that we are now basically starting to correct some of the leg up. Now, does that mean we're going to crash? It doesn't mean anything until something happened. Currently, we're above the 50-day moving average, whether we look at it this way or a tab view or even Japanese candlesticks. Let's leave it in tab view so you can see it better. So we've closed Friday above the 50-day moving average. Breaking down the 50-day moving average, meaning that on the S&P 500 under 509 or on the SPX under 5100, means that we are likely to go to around 5,000. So this is a gap here that we might close. Whether it would be the tension in the Middle East, earnings that will disappoint, anything like that, that might create that correction. That will be a big correction. Why? Because we haven't been underneath the 50-day moving average, like I mentioned, since November. Does that mean that the market is crashing currently? No, it just means that we're in a steeper correction than before. If after that we'll pull up the 150-day moving average, we can see that we still have a long way to go, and that might happen in the next few weeks. We need to get ready for it. Although seasonally, April shouldn't be as awful as it was. I think some of the give back during April was due to taxation, and of course, due to the fact that 2023 was good in the market, people got a huge tax bill and they needed to pay. So liquidating some of the high flyers provided that liquidity. We just will see. So if you're looking at charts, if you're interested in charts, whether you go to Yahoo Finance or TradingView like I'm doing, pull up the 50-day moving average. It's a simple moving average. Just look if we're above it or underneath it. That what might give you the reference of where the market is. As you can see here, there's this price action going up, and then it's stuck at around 5,200 and going down to around 5,100. It's only a minor correction of 2.9% since the peak. It's not something dramatic. The market hasn't crashed yet. Will it crash? Maybe. We never know. The one thing we never know of the future. The one thing that we can do is just look at the charts and take decisions on what we will do if something like that happens. Hope you enjoyed the weekly summary. We will be here next week as usual, or as it was usual up until a few weeks ago. And if you're interested to know where I disappeared for the last 2 weeks, I was in Israel, where I held 2 late night shows, a studio in front of a live crowd with guests. It was an amazing event. We talked about AI with NVIDIA. We talked about AI or creating AI movies with 2 very amazing people that created AI-generated movies. We talked about crypto. We talked about different platforms. Of course, it was in Hebrew, so I can't bring it here to the channel because you probably won't understand it. But maybe with AI, I might be able to translate a lot of the knowledge that exists on the Hebrew channel and bring it to our channel. That's why subscribing to the channel would help you, and also turning notifications on. Till next time, till next week, Micha Stocks saying, take care. Bye-bye.